Hello YouTube, welcome back to the channel, or if you are new here, I am Silver Shepherd, and I talk about anything and everything gold and silver related. And today we're diving into something that I think every silver stacker and gold investor should understand, and honestly, it's one of the most underrated tools in all of precious metals, and it's called the gold to silver ratio. And I'm going to break it down in the simplest way with examples, real numbers, and how you can actually use this ratio to make smarter stacking decisions. So whether you're brand new or have been stacking for years, this is genuinely one of those topics that can change how you look at silver and gold forever. And I just want to announce real quick that I now have channel membership, so if you guys join that, you will get personalized stacking advice, live market updates, and chances to win some free silver. So if that interests you, press the join button and subscribe to the channel. Alright, so without any further ado, let's get right into the video. Alright, so first things first, what is the gold to silver ratio? The gold to silver ratio is basically how many ounces of silver it takes to equal 1 ounce of gold, and it's that simple. So for example, gold is $2,400 and silver is $60. The ratio is 40 to 1 because 2,400 divided by 60 is 40. So you need 40 ounces of silver to equal 1 ounce of gold. The gold to silver ratio is quite literally just a comparison tool, but what makes it powerful is that this ratio has never stayed the same. It moves, and the movement tells a story. Historically, the natural ratio came from how much silver and gold we could pull out of the ground. That was roughly 12 to 1 to 16 to 1. For thousands of years, it barely changed. Then, humans got involved. Paper currencies, mining technology, government decisions, market manipulation, and the ratio has started doing all kinds of crazy things. And today, the ratio swings anywhere from 30 to 1 to 91, depending on the year and economy. And those swings, that's where the opportunity is. So why do people like us, silver stackers, gold investors, care about this? Because the ratio helps us understand what's expensive and what's undervalued. Think of it kind of like a seesaw. When the ratio is high, maybe 80 or 90 to 1, that means silver is cheap compared to gold. And when the ratio is low, 30 to 1, 40 to 1, silver is expensive relative to gold. This doesn't mean automatically you should buy one and sell the other, but it definitely gives you a feel for the market. People use this ratio as a way to know when silver is undervalued or overvalued and potentially convert silver into gold during certain cycles, or simply understand the big picture of precious metals. It's not a crystal ball, but it's kind of like a compass. It's a good tool and it tells you the direction of value. So now let's talk about what affects this thing, because it's not random. And the first thing is market demand. When investors get scared, recession, inflation, political tensions, gold usually moves first. It's the safe haven metal. Silver eventually follows, but not always at the same pace. Second thing is industrial demand. Silver is used in solar panels, electronics, medical technology, way more than gold. If industries slow down, silver can lag behind gold. And the third thing is mining supply. Silver is mostly mined as a byproduct of copper and zinc, so even if silver demand goes up, miners don't just start mining more silver. They only find silver because they're mining for something else. The fourth and last thing is investor psychology, and this plays a huge role. When people panic, they run to gold. And when people get optimistic or speculative, they run to silver. And those swings create opportunities for stackers who understand the ratio. So let me give you a couple of real life examples so this really can set in. So example number one is the 2008 financial crisis. Gold jumped fast because fear was everywhere and silver lagged behind. The ratio shot up all the way to the 80s. If you bought silver during that panic when everyone was scared, you did great. By 2011, silver pumped hard and almost hit $50, and the ratio dropped 35 to 1. So if you swapped silver for gold during that squeeze, you walked away with a lot of gold for the same amount of money. The second example is a very recent one, and that is the 2020 pandemic crash. And when the world shut down, the ratio didn't just spike. It hit over 120 to 1, one of the highest points ever recorded. Silver was insanely undervalued, and just months later, silver doubled, and the ratio fell sharply. Again, people who understood the ratio made great moves, and people who didn't got left behind. Alright, so now let's get into the practical real life part. How do you actually use the gold to silver ratio? And here are 3 simple strategies. So, number one, if the ratio is high, like 70 to 1, 80 to 1, 90 to 1, silver is historically undervalued. So, suckers usually load up more silver during these times because it gives the most upside potential. So, when silver is low, like 30 or 40 to 1, silver might be overheated and gold becomes a better play. You're not timing the market, you're just being logical and aware of the situation. Second one is using the ratio to swap metals strategically, and this one is huge. Every few years, not every few months, the ratio does big swings, and here's the simple strategy many experienced stackers use. When the ratio is high, you buy silver. When the ratio lowers, you swap that silver into gold. You're not spending more money, you're just converting during good conditions, and that's how people slowly build gold positions without dropping thousands of dollars at once. And this isn't day trading, this is a long-term wealth move. The third and last thing is use the ratio to keep your stack balanced. Some people like to keep a certain split, like 70% silver, 30% gold. That ratio helps you rebalance without emotion. If silver becomes overpriced relative to gold, you adjust. If silver becomes dirt cheap relative to gold, you adjust the other way. It keeps your stack healthy and intentional. So even though the ratio is a powerful tool, here are a few mistakes that we still see all the time. Mistake number one is thinking the ratio tells the future. Ratio doesn't predict everything. It's not a guarantee, it's just a rough guideline. Use it to understand value, not as a fortune-telling tool. Mistake two is swapping too often. If you're swapping every month, you're doing way too much with it. Ratio is a slow macro tool, not a short-term trading indicator. Swaps should be rare and intentional. The last mistake is forgetting premium. In the real world, premiums can kill the math. If you're swapping American Silver Eagles for gold Eagles at a coin shop, that's not the same as swapping bars for bars. Always compare total costs, not just the spot price. So right now, in 2025, the ratio continues to bounce around depending on inflation data, interest rates, and global tensions. But the big story about that is silver is still historically undervalued at about 73 to 1 right now. Gold is pushing all-time highs, and silver is as well, but it's still moving slower than what gold is, and the gap between them is still wide. Stackers who understand the ratio are paying attention, and many of them are quietly stacking more and more silver while others are distracted. This doesn't mean you blindly load up, but it does mean the ratio is worth watching.
So now let me talk for a minute about what I would personally do with the gold to silver ratio sitting about 73 to 1, because that is one of those zones where stackers start paying close attention. So for me, 73 to 1 is kind of that middle ground where it's not insanely high like we saw back in 2020 when it hit 120 to 1, and it's not extremely low like the rare moments when silver rips and it dips down to the 30s or 40s. But 73 to 1 is still telling me that silver is extremely cheap relative to gold. So if I had extra money to stack right now, I'd definitely be leaning more towards silver. Because the math says it still has way more room to go, and we can see even higher all-time highs. So honestly, this ratio keeps me extremely patient. Gold is at or near all-time highs, and silver is still lagging a little bit behind. When the ratio is 73 to 1, it basically reminds me that silver hasn't had its full run yet, and that's not financial advice, that's just the reality of how these metals move historically. Gold runs first and silver plays catch up. So if I'm stacking today, I'm buying more silver than gold, and I'm keeping an eye out on the ratio weekly. And I'm staying ready for a possible swap for a minor amount of my silver to gold, but only when the ratio actually compresses lower. For now, 73 to 1 is a green light for building more and more of a silver position because it says that it still has more room to go and we're not done with the bull run yet.
Okay, so that is the gold to silver ratio explained, what it means, why it matters, and how to actually use it in stacking in the real world. And this is one of those topics that separates casual stackers from ones who build long-term wealth with precious metals. And once you understand the ratio, the whole silver and gold market makes way more sense. So drop a comment down below and let me know what you guys are stacking right now. And if you learned something new today, make sure to hit the like button and subscribe. Thank you guys so much for watching, and I will see you guys in the next one.